It's getting crazy out there, people. Ups, downs, who knows where it's going to end. Stock market pricing is way above warning levels and leverage is once again very, very high. And it seems that everyone is either saying that we're about to be in deep shit or pile the hell in. So I know that there's a lot of videos out there about GameStop and Vlad the Stock Impaler, but I thought that it would just be a good idea to make a video on how I felt about this fervor in the stock market pricing and the possible and probable pain that it'll cause some or many of us. So I've been interested in the stock market for quite some time now. I've read books by great investors. I've read books on options trading, swing trading, day trading, forex trading. I've watched countless videos on market movements, stock prices, valuations, predictions for the future, and I've watched my fair set of scammers as well. I think I understand most of the lingo: call, put, short, long, short squeeze, margin, margin call, SPAC, pipe. And yet today I find myself even more confused than I was yesterday, and even more confused than I was last week. At this rate, by next week Friday, I'm going to end up with a broken brain. I found myself in the past being swept into the stressful and chaotic world of money management and stock predictions, with one YouTube guru saying buy on the dips, while another one says all in on Bitcoin, another one says no, hedge your bets on gold, and yet others clickbait me into watching their latest $1 million investment, which I, by watching it, essentially paid for. Adding to this, you have the fund managers like Cathie, the golden disruptor, and Chamath, the valiant fighting for the common man, flouting only the disruptor stocks. Information overload. I mean, I completely get it. We're in such a position at the moment, aren't we? If we have cash lying around, we've been told that every day that we hold it, it loses value. Or worse yet, that our currency will completely collapse by the end of the week. I mean, come on, hyperinflation, just around the corner. Another Zimbabwe, here we come. Or we've been told that the quickest way to bridge the ever-widening inequality gap is to gamble, I mean invest, in the stock market. Either way, our hard-earned or hard-borrowed money is driving us down the fear path, where many of us are sitting all day long, analyzing candlestick patterns, listening to Bloomberg on the TV while reading the latest Yahoo Finance article, and also plugged in with one headphone, listening to the latest YouTuber live streaming where he's going to put his next 250,000 US dollars. We're also waking up in the middle of the night checking the pre-market action on where Bitcoin is going to start. This is not healthy. Just try and argue with me, I dare you. And I can bet at least half of you watching this video have done all, or are doing all, or at least some of these things that I've listed above. Now I realize that what I'm about to say might be an unpopular opinion, but I'm going to say it anyway. This democratization of investing I don't think is doing us any good. Our economies have stagnated while government and us pump money into the stock price, pushing the values way above normal levels. We are in no way bridging the inequality gap. We are simply being fooled by the ease of use of these apps into believing that we have some sort of control over our financial future by leveraging money in hand, or worse, borrowed money, into stock predictions that absolutely no one can guarantee. But this doesn't dissuade us from trying, or at least spending far too much time trying to figure out how it all works. While every single day Wall Street comes up with far more complicated instruments for us to play around with. Main Street, where all production, services, and real growth from the sweat of the brow of the entrepreneur and the workforce that they employ, who toil daily to prop up the nation's GDP, is so far removed from the machinations of Wall Street. But the fact that this does not dissuade us from trying to invest in the stock market, and with the ease of use of these applications, I've come up with a sort of set of game plan notes that you might want to follow. So first, let me make a distinction between the passive and aggressive investor. If you are risk averse and have absolutely no intention to sit in front of candlestick charts all day long, listening to Yahoo Finance or so on, then this information is still for you, but only in as much as it's always nice to learn something new. I think it's also important for me to point out that in no way in this video am I trying to dissuade investment. I'm all for investment. I just don't think that the way that we are being marketed investing at the moment is all that healthy. There's nothing wrong with having a risk-averse portfolio, like a decent amount of good government bonds and an index fund and a small portion of decent stocks. and then simply leaving it alone. Conversely, there's also nothing wrong with adding a little bit of risk into your portfolio as long as it's with money that you can stand to lose. And in no way in this video am I judging the candlestick chart warriors, the YOLO traders, the day traders, the swing traders, or any other kind of trader. All I can say is all the very best to you, and I hope for your success. Okay, so on to my advice, which is not financial advice. It is more sort of a game plan for the avid investor. So the first thing to do, if you have a little bit of extra cash lying around which you are looking to invest, is to just take a moment and be absolutely grateful that you are in that position, with so many people suffering all over the world. The next thing to do is get yourself educated. The way I did it is I set aside 1 hour every single day for quite a while. I can't even remember how long it was, and I absorbed all the latest news in trends of the market, in commodities, in as much financial information that I could possibly gather in that allotted time. This started giving me a general understanding of up-to-date information on certain things that happened in the market and the cause and effect relationships that they had. This process can take some time, and if there's a term that you don't understand, either stop and look it up or write it down for later evaluation. By sticking to this allotted 1 hour time slot every single day, you will very quickly understand if you have a real interest in following the markets. Now you can start furthering your information gathering by reading some decent books. Now I can't sit here and tell you exactly which books to read, but what I can say in terms of stock investment or value investing, I think Warren Buffett is a very, very good place to start. I will link some of those books on Amazon down below in the description. The one thing that these books can actually teach you is the difference between speculation and investing. Okay, so I've spent some time doing this. Can I now download the app? Well, no, you bloody well can't. Now you have to understand your why. Yes, that is exactly what I said, the esoteric why. Why are you investing? Is it to get rich quick? Is it to be some obscure statement like financially free? Or is it to be a part of a group? Or is it simply for the rush? If you answered yes to any of the above, then obviously it's not really great for you to be in the market and to be placing bets on your financial future. I believe it's a great idea to examine your motives in everything that you do in life. And for investing, it's even more important to understand your temperament. Successful investing, among other things, takes a lot of work, research, and patience. If you are a person who doesn't have a lot of patience like myself, then passive investing is definitely the way for you to go. So what happens when you buy stock in a company? Well, the truth is that you're actually buying a portion of that business. Another way to look at it is as if you are lending money to a business in exchange for the capital back at a predetermined length of time at a certain interest rate. Now, you wouldn't lend your unreliable friend money and hope for it back. So why would you lend an unreliable company that you don't believe in money and hope for it back? It doesn't make much sense. So this is the premise behind sort of investing in speculation. So what I'm not going to do in this video is tell you how to value stocks in terms of what you want to buy. Every stock that you purchase is a very personal thing for you. You have done the research, you have checked the financials of the company, and you must decide whether you think that the management team will take this company from one strength to another strength. And on that note, anybody who can definitively tell you that they can predict the value of any stock or price of anything in the future is absolutely full of shit. It simply is not possible. Bitcoin tomorrow could be worth 250,000 US dollars for one coin, or it could be worth $4. You just have no way of actually knowing. So seeing as though I cannot give you any predictions of any stock values as of tomorrow, neither can Cathie, neither can Chamath, neither can the naysayers. We don't know if we're going to go into a recession or not. We actually have no idea. You need to base your decisions on common sense and your own research. Just a quick note here on that. Warren Buffett, hailed as the best investor of all time, has given around a 20% return on investment year in, year out for the last 50 years. And this is why I think I am justified in saying that you can't believe anybody who guarantees you a higher rate of return than that. Now, don't get me wrong, I do understand that there are some people who go way above 20% and have done for the last couple of years, like Cathie Wood. However, I believe that these are anomalies, and over a lifetime of investing, you will probably find that they level out to around 10–12%. So yes, you've done all your research, you've discovered whether you want to be a passive or aggressive investor. You can download the app now. But one word of caution here, please do not over leverage yourself by the use of margin. You have so much to lose, and please don't get caught out by this. Please always invest with your head and not your heart. Use common sense and reason when placing your bets in the stock market. Mitigate your losses by sticking to a dedicated trading plan, leaning always on patience and constant up-to-date info gathering. On this note, be very careful of information overload. Choose the channels of information gathering very, very carefully and try and stick with those. Oh yes, I almost forgot. If you don't have money lying around, please rather set your mind to a more decent pursuit of finding these funds rather than sinking borrowed money into lining Vlad's pocket. Just simply stay away from using other people's money to place your bets on the stock market. Finally, be safe out there, investors, and here's to you making massive returns in 2021. All the very, very best. Guys, thank you so much for watching my video and for all the new subscribers, man. It really, really does feel good to get some subscribers going. I know I don't have many at the moment, but for the ones that I've got, I really, really appreciate you watching my videos, and I hope you get something out of them. If you do, please smash the like button. It really helps with the algorithm. And please subscribe if you haven't already. I really would appreciate it. Anyway, I will be producing a new video in the coming week, another 2 videos next week, and I look forward to making them and to seeing you guys again soon. Cheers.